In this video, we will compare LLC versus S Corporation. We will discuss the key differences, advantages, and disadvantages of LLC and S Corporation, empowering you to make the best decision for your business. If you want to know if LLC or S Corporation is best for your business, please visit Zen Business and Inc. file. Their link is posted down in the description. And with that in mind, let's get started. Overview. When starting a new business or considering changing your business structure, one of the crucial decisions to make is whether to offer a limited liability company or an S corporation. Both of these business entities offer unique advantages and disadvantages. In this article, we will explore the similarities and key differences between LLCs and S corporations to help you make an informed decision for your business. Similarities between LLCs and S corps. Limited liability protection. Both LLCs and S corporations provide limited liability protection to their owners. This means that the personal assets of the owners are safeguarded from business debts and liabilities. Instead, the business entity itself is responsible for its financial obligations. Separate legal entities. Both LLCs and corporations are separate legal entities created through state filings. It's worth noting that a corporation can choose to be taxed as an S-Corp by filing IRS Form 2553, allowing to benefit from certain tax advantages. Pass-through taxation. LLCs and S corporations are both pass-through tax entities. This means they do not pay income taxes at the business level. Instead, business profits and losses are passed through the owner's personal tax returns, and any necessary taxes are paid at the individual level. Ongoing state compliance requirements. Both LLCs and S corporations are subject to state compliance requirements, such as appointing and maintaining a registered agent, filing annual reports, and paying annual fees. Additionally, they must notify the state of significant changes and may need to qualify to do business in states other than their formation state. Key differences between LLCs and S Corp. Ownership. Ownership restrictions imposed by the IRS differentiate S corporations from LLCs. LLCs can have an unlimited number of members, while S corps are limited to a maximum of 100 shareholders. Non-US citizens or residents can be members of LLCs, but S corporations cannot have non-US citizens or residents as shareholders. S corporations cannot be owned by corporations, LLCs, partnerships, or certain trusts, whereas LLCs do not have such restrictions. LLCs can have subsidiaries without limitation, while S corporations may face restrictions. S corporations cannot issue classes of stock with different financial rights, whereas LLCs are not subject to these restrictions. Management. LLCs offer flexibility in managed options. Owners of an LLC can choose to have members or managers manage the company. When members manage an LLC, it operates similarly to a partnership. If there's only one member, known as a single member LLC, it resembles a sole proprietorship. When run by managers, an LLC operates more like a corporation, with members not directly involved in daily business decisions. S corporations have board of directors overseeing major decisions and officers responsible for daily business affairs. Shareholders do not manage the business. Ongoing formalities. S corporations typically have more extensive internal formalities compared to LLCs. S corporations are required to adopt bylaws, issue stock, hold initial and annual director and shareholder meetings, and maintain meeting minutes with corporate records. While LLCs are not required to follow these formalities, some advisors recommend adopting an operating management, issuing members' shares, documenting annual member meetings, and recording significant company decisions. Additional differences between LLCs and S corporations include transferability of ownership. S corporation stock can be freely transferred, provided IRS ownership restrictions are met. LLC membership interests are typically not free transferable, often requiring approval from other members unless specified differently in the operating agreement. Self-employment taxes. S corporations may offer advantages in terms of self-employment taxes because owners can receive reasonable salary subject to FICA taxes, while corporate earnings may be treated as an earned income not subject to self-employment taxes. Consult your tax advisor for guidance on your specific situation. Allocation of profits and losses. S corporation shareholders receive profits and losses based on their ownership percentage. LLCs have flexibility in allocating profits and losses, allowing members to distribute them based on various criteria. In conclusion, choosing between an LLC and S corporation is a critical decision that significantly impacts your business's operation and taxation. Both structure offers distinct advantages and disadvantages, and the right choice depends on your business goals, ownership preferences, and compliance obligations. It's essential to consult with legal and tax professionals such as Zen Business and Inc. file to make any informed decisions that align with your specific business needs and objectives. By understanding the similarities and differences between LLCs and S corporations, you can navigate this important decision more more effectively and set your business on a path to success. You can visit Zen Business and Inc. file through the links in the description box. And there you have it, LLC versus S Corporation. Which business model are you going to go for? Please let me know down in the description. I hope this video was helpful. Thank you so much for watching. Subscribe.